We get to single best chart. Here's Vonnie, Quinn.
Thanks, Tom. Well, a 5% or so rally today for China's main benchmarks, but still the Shanghai Composite Index barely out of bear market territory, and the tech-heavy Shenzhen Index still down more than 20% from its peak earlier this month after a plunge in the last 2 weeks. It's today's single best chart, and Tom, I know that you actually helped make up this chart yesterday. I stood over you while you did it.
I mean, it's China, and there's a trend, and there's an old trend, and up we go. That's a regular old chart, not log, and then we spike up and we come back. We got a lot way to go to get back to trend.
Well, you know what? The Economic Observer in China is reporting that China's government considering steps to reduce the stamp tax and allow pension funds invest in shares. They're still trying to buoy this market, even though it clearly doesn't need it.
Well, there it is, the back and forth. Willem Bouter with us, of course, head of global economics for Citigroup as well. Is China a real system? I mean, Greece has to work within a real system in Europe. Is the linkages of China government, fiscal and monetary economics over to their central bank, is it a legitimate system or is it just completely jury-rigged?
No. Well, it is a recognizable, EM-style financial system with a liquid stock market, not much else by way of financial asset markets. The foreign exchanges are still controlled to a significant extent, so the markets are illiquid and thin.
Well, and in fact, they're giving subsidies for companies to go public in China, right? There's a company that's taking itself private and gone public in the US, taking itself private so it can go public again in China.
Yes, it's an attempt to, I think, to deepen their markets unless Chinese governance improves significantly. I don't think there'll be a lot of voluntary takers.
Okay.